Hello everybody. In this video we are going to discuss about private equity or fund accounting or fund administration, whatever you want. So I am going to discuss this topic relating to funds related. Now I will discuss in this class relating to general partner versus limited partner, means who is the persons, these are persons, and fund administration means what, and what are the services will be there in fund administration. Next, private equity and versus venture capital. So private equity means what and venture capital means what, and these stages, life stages of venture capital and private equity, and different types of financing, what are the financing will be there. Next major topic will be the different type of teams in the fund administration. So what are the types will be there in fund administration, like client service team and other operation team. Next, there will be corporate actions team, and there will be NAV calculation team and pricing and valuation team. These different types. So along with examples I will going to discuss in this class. So let's start our session. Firstly, in this class we will discuss about relating to private equity or fund administration, why the fund houses will be required for a fund administration. So what is mean by fund administration? So fund administration means where the investment management industry is very require these investment bankers or fund houses, they will outsource their accounting services to these fund administrators. So majorly outsourcing services will be there, these fund managers. Fund managers means this general partners. So whenever the fund manager, they are outsourced their fund accounting related work, now the general manager will focus on their core activities, and they will ensure their regulatory compliances. They will maintain investor trust. Investors means here limited partners, and they will have the fund administrators will have more experience and expertise knowledge in the accounting field, and they will manage the complex transactions and regulatory requirement and make them valuable partners in the successful operations of the investment. Now here we started with the fund administrations there, and fund houses will be there. Fund houses have two types of partners, one is general partner, one is limited partner. Who is general partner, who is limited partner? Now general partner means who is the person who will manage the fund, and he will take the strategic decisions to create value for stakeholders. Whoever the stakeholder will be there, whoever invested in the funds, and they will take care of these funds by the general partner. He, the person, will operate and control the management of the company. So entire company will be managed by the general partner himself, and he will oversee the daily operations and investment decisions. Where can we invest, what is the position, and where can we diversify, where can we sell, these all will take care by the general partner, and they will collect the, for this work they will collect the management fee. This is one fixed percentage, and also they will also collect performance fee based on their performance. If the performance is more than the hurdle rate, if the performance is more than the exceeded the hurdle rate, then they will get the performance fee. We will see what is there in hurdle rate, means what is the benchmark, what is the fixed percentages, management fee, incentive fee. This will be seen in later classes. Now we will introducing the just topics we are introducing. Now for example, if we see the examples of roles and responsibilities of general partner in private equity fund. If we take the private equity funds, we have different types of funds like mutual fund, private equity fund, hedge funds. So we are more focusing on private equity now. Firstly, if we see example of Blackstone company in general partner, Blackstone or KKR, these are the major players nowadays in the private equity. Now general partner at Blackstone, he the person will be responsible for sourcing of investment opportunities, and he will connect the due diligence. Due diligence means whenever you are purchasing one company, you need to investigate about that company before purchasing the company. So that type he will connect due diligence. Next, make the strategic decision to enhance the value of portfolio companies. So he will see how what is the value for this portfolio company. He will take the strategic decisions. These are the roles and responsibilities of general partner, and for that this work he will collect management fee and performance fee. For example, if you see Blackstone manages 1 billion fund, so if he managing the $1 billion funds, he will collect 2% of management fee and 20% of performance fee. 20% will be there only when above the hurdle rate. Here if it here we are taking the hurdle rate will be 8%. Hurdle rate means this is like a benchmark rate. If you put your money in the bank, you will get minimum this amount without any charges, without any management fee, without any incentive you need to pay to the bank. So this hurdle rate, minimum return, otherwise we can say that, so minimum return will be provided. After that, if we exceeded that minimum return or benchmark return, then the general partner will be eligible for the performance fee or incentive amount. Now this is general partner. Next, limited partner. Limited partner means he is the partner, limited partner, or we can also call as limited companies. These are the persons who is the investors in the fund. So one fund he is managed, created by the general partner. These persons will invest in that funds. He is known as the limited partners or limited partners. This person's liability will be limited to the extent of their commitment. So we will see what is the commitment, what is the contribution, what is the distribution. These all will be there. So firstly, only their liability will be to the extent of their commitment, and LP, limited partner, provides necessary capital to the fund but do not engage in daily operations. Daily operations will be engaged by the general partner. Next, limited partners includes whoever the persons will include in limited partners means like pension funds, endowments and insurance companies. Endowments means this not a profit motive companies like that. Next, alternative funds like hedge funds, private equity funds, and high net worth individuals. High net worth individual means whoever the individual person having more net worth. Like for example, if you have $1 million net worth, he will be a HNI. That person's these all persons will invest. These all persons known as limited partners. They will invest in the fund. That fund will be managed by the general partner. Now, the examples will be for the roles and responsibilities of the limited partner. For example, if we take CalPLUS, California Public Employee Retirement System, this is invest capital in private equity fund managed by the firm like Blackstone. So one fund house is there, and that fund he is managing by the Blackstone. Means here Blackstone will be the general partner and limited partner will be a person. So California Public Employee Retirement System will be the limited partner, and here Blackstone will be managing that fund. He will grow effectively. Now, types of limited partners. So we have seen that limited partner means institutional investors, HNIs, alternative funds. What are there? Institutional investors means like Harvard University Endowment Fund diversify its portfolio by investing in private equity and hedge funds. So the investors who are the limited partners, they will invest in different funds. So different funds they will use for to diversify their risks. And high net worth individuals, here the persons who is the investor like Warren Buffett, they are the invest personal funds in hedge funds and private equity, so they will get the higher returns. Next, alternative funds. Hedge funds like Bridgewater Association invest in private equity funds for diversification. Here investment objectives will be, what are the investment objective of these limited partners? So investment objectives may be pension funds. If you see the pension funds objective will be, they will collect the amounts from these persons, and they need to pay the liability, means they need to pay at the end of the term. So they meet that long term liability, they will invest this type of funds and they will achieve the returns. These are pension fund investment objective. Or if you see the insurance company's objective, majorly this insurance companies, what they will do, they will collect premium from the persons, and that premium they will invest in different funds, they will achieve the returns, and they will meet their liability. What are their liability? Their liability will be the claims. So if you have any claim, they need to pay that amount. For that payment they will invest and achieve the returns. Next, endowment funds. Here, the Bill and Melinda Gates Foundation invest in private equity to sustain its philanthropic efforts. Means they are funding, they are maintaining like a trust. Whoever, they will not profits motive. They do not have a profit motive. To sustain that non-profit motive, they will invest this type of funds. Next, HNIs means individual person with a substantial net worth. They will invest. Why they will invest? What is their objective? Their objective will be to achieve the superior returns. This is the main objective of HNIs. Next, here we have different persons. We have introduced different persons. For that person, we need to have put some trust. The books, whatever they are asking, if there some person asked the returns or some persons asked the performance report, so this all will be taken care by the fund administration. Here, fund administration, why the fund administration is essential for the fund houses? Here, firstly, accuracy and compliance. So proper books of accounts are crucial for accurate financial records and compliance with the regulations. So we need to maintain the proper books of accounts, then only our financial records will be accurate, then only our compliance will regulations. Next, outsourcing benefits. Here, fund manager can focus on investment strategies and client relations without accounting distractions. So general partner have different mindset, means they always try to get the higher returns, strategies, different funds. So they don't bother about this accounting. So don't want to get the distraction of accounts, they will outsource their accounting work to fund administrations. Then they will focus their main work, core activities. Next, expertise and efficiency. So fund administrations will have the handle complex transactions and reporting requirement efficiently. So they will have complex transactions, they will handle complex transactions. Who is the person fund administrator? They have lot of knowledge, they have lot of manpower for accounting. And transparency and trust. Independent NAV calculation by fund administrators enhance investor confidence. So here, investors means the limited partners. Whoever the limited partners, they will trust, means they need to pay the amount based on NAV, and they will collect the amount. If you have capital contribution based on NAV, if you have fund house is giving any distribution to this limited partner, then also based on NAV only. So that NAV is the main factor for the fund houses. Here, for the NAV, if the general partner is calculated, means he is the person in the company and he only collecting and calculating the NAV, that does not have the trust. So if the NAV calculation performed by the other individual who is having independent from the company, that independent from the fund houses, then investors have more trust on that NAV calculations. So transparency and trust. Next, cost effectiveness. Outsourcing is often more cost effectiveness than billing in accounting house accounting. So if you are maintaining our own accounting team, it will have more cost. Next, for example, if we take the example for accuracy and compliance means TPG, a private equity funds require meticulous record keeping to comply with Security Exchange Commission regulations. So these funds, they need to follow their gaps. So if you are in Luxembourg, you need to follow Luxembourg gap. If you are in US, you need to follow US gap. That companies will follow Security Exchange Commission regulations. So they will take care of this accuracy and they ensure that compliance if the fund administrator is there for that fund house. Next, outsourcing benefits. Innovations technology, they will outsource their fund administration. Who is the fund administration? To State Street. Then that company will focus on quantitative trading strategies. What are where to invest or how we will get the superior return, they will focus. Next, expertise and efficiency. Sukia Capital leverage Apex Group's expertise to manage financial transactions and reporting for its portfolio companies. Next, transparency and trust. So investor in KKR funds expect transparent NAV calculations. So if you are in KKR funds investors, you will trust that NAV if you performed by the other than KKR persons. So now they will go with the Citco company. So Citco is the one fund administration highest fund administrator. So they will verify the Citco. Then the investors will trust that NAV. Next, cost effectiveness. Here Brookfield Property Partners find it's cost effective to outsource fund administration to SS and C global operations. Now, key services provided by fund administrator. What are the key services provided by these fund administrators? Means they will transactions record and bookkeeping accurately and timely recording of financial transactions. So they will ensure the financial transactions, they will record all transactions in timely manner and accurately. So they need to comply the due dates, they will comply. Next, NAV calculation, independent and unbiased calculation will be there for fund NAVs. Next, regulatory compliance. So they will ensure all regulations. If you have any sub regulations, they will ensure that. Next, audit support. So if the company fund house is getting the audit, at that time also whatever the audit queries, this fund administrator will clear that audit queries. And next, audit support, assisting with audit queries and maintaining comprehensive record reporting, provide detailed and transparent reports to stakeholders. Next, for example, if we see take the example for above, transaction recording and bookkeeping. Northern Trust record all transactions for private equity fund, ensuring accurate entries for example, if we see entries will be there, capital call and distribution and what are the investment, what are the sales, these all entries will be ensured from day to day. And end to end transaction we need to record the transactions. For example, NAV calculation, BNY Mellon is there, they will calculate the NAV for hedge funds managed by 2 Sigma. So 2 Sigma is the fund house and fund administrator will be BNY Mellon, providing a reliable performance metrics. Here performance metrics will be different will be their expense ratio, profit ratios, NAV ratios, these all will be provided. Next, fund regulatory compliance example, fund administrator ensure Apollo Global Management. Just a second, yaar. I think so. Okay, will be there. Next, fund administrator ensure Apollo Global Management Fund comply with all relevant regulations and will be provided. Next, audit support. For example, JP Morgan provide detailed records and documents for venture capital funds during the audits. Next, reporting. Citco is there. Citco will generate comprehensive report for private equity fund managed by Carlyle Group. So Carlyle Group is the investment banker. Citco is the fund administrator. Investor keeping investor informed about the fund performance and financial health. So they will explain what is the fund performance, what is the financial health of that fund to the stakeholder, to the investor, to the limited partners. Now, what is mean by private equity? private equity means what and venture capital means what. Here private equity means and venture capital both are investment in private companies only, so they will invest in private companies, not a public companies. Now but they have different target companies and different stages of investment will be there. If we see the private equity, here we will involve investing in maturity company also, they will invest, and not for publicly traded. So these companies which are not publicly traded, they will at a maturity period, means we in product life cycle we have four stages. One will be initial stage, next growth, next maturity, next decline stage. So private equity may go with any stage, means at investment stage they may go, growth stage, maturity stage, at declining stage also they will go. Declining stage they will, when the type of strategies will be distressed strategies. Now these maturity companies they will purchase and they will restructure some of, they will restructure some investments in that company, they will improve the profitability of that company and eventually sell the high value private equity as usually acquire significant control interest in the company. So they will take over the companies which have bad performance and they will restructure and they will create high value for that company, then they will sell that company. This is private equity. But where has venture capital? Venture capital always involved in early stages, means they do not go with the growth stage, they do not go with the maturity stage, they do not go with the decline stage, so they are always with investment stage only, that is early stage. Here high potential startups, venture capital provide capital to startups that need funding to grow, so they will give fund to grow. Here typically exchange for equity, the aim is to support this company through their initial growth stage and eventually exit through on IPO or acquisitions. So they will help in initial stage and at the end of the day at the existing stage, so eventually they will may go for IPO or they may go for the acquisition. For example, if you see the live example, private equity, Blackstone Group acquisition of Hilton Hotel in 2007, they are purchased $26 billion. Now they are restructured that hotel and then they go with the public again at 2013, so now significantly increase that value. Next, if we go with the example for venture capital, Sequoia Capital's early investment in Google. Here Sequoia invested 12.5 million in Google in 1999 at initial stage of that Google, and the company subsequently IPO was went into 2004. Here IPO means what? Initial public offer, or a few months follow public offer. Initial public offer means first time, FUO means second or third time or more. Next up, here where why company need private equity and venture capital. Here private equity or venture capital, why company will be need, means company will seek private equity or venture capital for various reasons, they have their own reasons. Primarily, majorly why means accessing the capital or access to capital or expertise or resource that can accelerate growth and enhance the value. Here for example, if whatever the reason, we will give the some examples. For capital for growth means company often need significant capital to expand its operation. If company want to expand its operation, they need capital. If company want to enter into new market, they want capital. If company want to develop new product, they want capital. Then this private equity or venture capital will fund the amount. Next, strategic guidance. So these are the persons who are there in private equity or venture capital, they have strategically guide these companies. Investors bring valuable industry experience and strategic guidance, helping companies refine their business models. So they will help in business model development or improve their operations and navigate the challenges, whatever the problems will be there, they will navigate. Next, network opportunities, accessing to broad network to industry contacts. These are the persons, whoever the private equity or venture capital, they have much network, more contacts will be there. These persons will get over, and potential customers, whoever their potential partners will be there, they will see. For example, if you see the live example for private equity, Dell buyouts in 2013 led by Michael Dell and Silver Lake Partners. The deal provided Dell with capital and strategic flexibility to transform its business model and focus growth area like enterprise solution and cloud computing. So they want capital. Why they want capital? To go with means they want to grow, focus on growth. So what is that growth? What they are focused for? Enterprise is solution and cloud company, they are focused on that area. Next, for example, venture capital, Airbnb's multiple funding rounds starting with $6 lakhs seed investment from Sepia Capital in 2009, which enabled the company to expand globally and become leading platform in the hospitality industry. So this company wants capital because what is the reason means they want to become the hospitality industry lead platform globally. So they want $6 lakhs. This person will need venture capital funding. Now, what is the private equity cluster or private equity life cycle will be there? Private equity funds go through several stages in their life. Eventually, if we see fundraising, deal sourcing, due diligence, acquisition, management, and exit. Fundraising means here the private equity funds will raise capital from institutional investors, high net worth individuals, and other sources. So they will raise the capital first. After raising the capital, they will deal sourcing, means eventually identifying and eventually potential investment opportunities. What are the investment opportunities will be there, they will identify. Next, if after the identifying, they will due diligence, means they will perform the due diligence, means like they will investigate that company, target company, to assess the potential, how much potential will be there, how much we can spend on this company, after spending how much we need to put other than investment, and how much we will get. They will perform this one. If the performance is okay, then they will acquisition, means purchasing the significant stake in the target company. Always try to get in that control and managing. So now after purchasing, they will actively manage the portfolio company to improve its performance. So they will actively manage that company and they get that significant value to that company, improve the performance. Next, exit the means after company is got improved, now the go with selling. Selling means they will go with the IPO or sell to strategic buyers or secondary sales to other investors. So they will sell and they will get the profits. This is there in private equity life cycle. For example, if you see the live example, Blackstone Group is there. Blackstone Group, after raising a new private equity fund, Blackstone will identify if we have they raise the new fund. Next, they will see the identify and acquire the Refinitiv in 2018 for $20 billion. After that, they perform some operation. They improved the operations. Eventually, they stole in London Stock Exchange. So if you see in India, we will go with the BSE or NSE. There, worldwide, they will go with the London Stock Exchange. So 20 billion they are the investment. They perform some operation. They sold at $27 billion. Now, next, what are the life stages of venture capital? Venture capital stages will be seed capital, startup, early stage financing. Here these stages of financing refer initial phase of company life cycle when venture capital funds will be most active. First of all, seed financing means what? Seed financing means initial capital provided to entrepreneurs to develop an idea into a viable product or business plans. So they have some business plans, they have some viable products. This idea will be developed by using the venture capital funding. Next, startup financing. So sometimes they will go with the startup financing, means here funding to help company develop its product or start operations. So if company have existing business but they want some fund for to start operations or products, then venture capital will help. Next, early stage financing. Here early stage financing means further capital to support early business growth and operations as the company begins to generate revenue. So here further capital means like a working capital requirement they will allow. If you see the live example for above, live example will be Dropbox received seed funding from Y Coimbatore in 2017 to develop its cloud storage solutions. So Dropbox is existing business. They want to develop their cloud storage solutions. For that they are seek fund received from venture capital from Y venture capital fund. Next, startup financing. Startup financing means Uber. Uber $1.25 million seed round in 2010 to launch and expand its ride sharing experience. So to start ride sharing experience, they seek the amount of $1.25 million. Next, early stage financing. Here early stage financing means Instagram $5 lakh seed investment from Anderson Horowitz in 2010, which helped the app grow and eventually be acquired by Facebook in 2012 for $1 billion. So $1 billion, 5 lakhs seed investments. Next, different types of financing will be expansion financing. Here expansion financing, here the existing business want to expand their business, then they need some financing. The type of financing is known as the expansion financing. Here provide company that have moved past the initial stage and looking to scale up its operation, enter into new market or launch of new product. For example, if you see the live example, when Spotify came, Spotify means this music album, so we can create the playlist. So they raised $100 million in 2012 for a consortium of investors including Goldman Sachs. So Goldman Sachs means is the one investment banker, top 10 investment banker, one investment banker is the Goldman Sachs. This supported for this expansion into new market and enhancing its streaming platforms. Next, replacement financing. So if you have one machine, you want to replace that machine, then you need some financing. That type of financing is known as the replacement financing. Here replacement financing involves the purchase of existing shares from other shareholders rather than providing new capital. So you are purchasing the existing shares from other shareholders other than new capital investment. They don't go with the IPO, or they almost go with the FPOs. This often happen when original investors or founders or proprietor who is the first person of the company founder, they want to cash out, they want to get out from the company, then they will go with this replacement financing. For example, if you see the live example of for replacement financing, buyout of founders in 2013, that Pinterest raised $225 million was raised. Pinterest, some of which was buy out shares from existing investors and employees, whoever allowing early stakeholders to realize the gain while bringing in new investors like Fidelity. Next, vulture financing. Vulture financing means we are stated that distressed strategies means vulture financing requires here refers to investment in distressed companies that are struggling financially. So which is the company is struggling in financially, this type of companies will take over by this person and at a low price. For example, if you see, I think so Lalita Jewelries, the owner who is the owner of the boss, that boss was purchased that Lalita jewelry at low price when this financial viability or this Lalita jewelry is struggling in financially. That time the boss was purchased this Lalita jewelry at a lower prices. Then they invested. For example, if you see another live example will be Oak Tree Capital Management, known for investing in distressed assets. So this company is almost investing in distressed assets only. So they are acquired significant stake in General Motors. So whenever the General Motors company financial viability is not good, at that time this Oak Tree company was purchased that company at 2008 when financial crisis will be there for that General Motor, and where which provide profitable when GM recovered and repaid its debt. Next, private equity and venture capital trends. What are the trends will be there nowadays? So here recent trends, if we see, private equity and venture capital was going to increase because if we see in focusing the technology or healthcare or rise ESG, that is environmental social governance criteria, and growth of mega funds. If we see the live example, nowadays technology investment, the surge in investment in AI and fintech. So nowadays more investment will be there for AI. So for that investments we need funding. So fundings will be there, venture capital or private equity, different funds. If we see the recent yesterday's newspaper, the government is going to invest 2000 crores in AI. So that type of investment will be there. Whenever there is a investments, then the persons will require fund. The fund will be provided by the venture capital or private equity funds. Different hedge funds will be provided that type of funds. For instance, our SoftBank Vision Fund invested heavily in companies like WeWork, Uber, and ESG focus. That BlackRock's emphasis on sustainable investing, which has lead to increasing investment in companies to meet the ESG. So they want to meet the ESG, they are investing. Next, basic functions of the fund administrator. Now we have seen the different life stages. For that life stages, for each stage we need to account that companies. So for the accounting, we are outsourcing that accounting work to outsource that fund administration. Now what are the different functions or different type of teams will be there in fund administration? Means one first team will be the client service team. What is this client service team? Here the client service team role will be serve the primary point of the contact of for the client. If any client is coming, the first meeting person will be the client service team. They ensure smooth onboarding and compliance and ongoing support. So initial, ongoing, entire process, and at that end and compliance, this all work will smoothening this client service team, and they will handle the clients whatever the client request is there, client queries is there, or clients providing to clients regular updates about the fund performance. This fund is performing like this fund is performing like this. They will give that update, regular update to investors. Client service team, they also collect and act as client feedback to continuously improve the service. They will get the feedback from the investors. Now if we see the practical example of client service team's role, onboarding new clients means whenever the new client is there. For example, ABC investment group decided to invest in a fund. Then whenever they want to invest, they need to meet the person client service team. This client service team will initiate the onboarding process, and this involves collecting necessary documents like identification, a proof of address, and financial information to complete the KYC or AMC regulations. AML regulations means anti-money laundering regulations. KYC, know your customers, and they will ensure that company, whichever is the company is came, they do not have any red flag. The teams set up clients accounts in the system and provides comprehensive welcome packet detailing the fund policies and procedures. So whenever the clients came, this team will take care and they will give welcome packet and welcome, and they will give the fund policies, what is the fund policies and procedure, fund terms and conditions, they will explain to the client. Next, this is whenever new client is come, onboarding a new client. If you are ongoing support means here the investment paid, if the investment paid, the client service team will regularly send the performance report to ABC investment group. This is the person who are invested na, so ABC investment group, they decided to invest. Now after the investment they will get performance report from the client service team regularly and detailing the key financial metrics. What is the portfolio is changing, what is the market outlook, what is the client has operation questions about this report, and client provides prompt and detailed responses will be there. Next, after this client service team, the next team or next following team will be the operation team or OP team. Here operation team means ensure the accuracy and efficiency of daily funds operations. This includes various type of reconciliation to verify the fund records, matches those external parties like brokers and custodians. This operation team means they will ensure the day-to-day operations of the fund house. For that they will see the records and they will reconcile these records with custodians, with brokers. For the reconciliation we have three types of reconciliations. One is cash reconciliation, one is position reconciliation, one is transaction reconciliation. What is mean by cash reconciliation, what is mean by position reconciliation, what is mean by transaction reconciliation, we will explain and we will also give the example. Now cash reconciliation means what? Here we need to compare the cash balance in the records of the fund accounting systems. What is the fund accounting books, what is the cash balance, and what the custodian was reported. We need to reconcile both. Next, position reconciliation. Here we need to match the securities holding reported by the broker. So we need to seek the broker's contact notes, what are the holding they are provided and what is the fund internal record there. We need to reconcile that. One, class reconciliation, after position reconciliation, next transaction reconciliation, next ensuring individual trade details align between client accounts and broker custodian records. Here transaction reconciliation means we need to see the individual trades, what is there, means accounting means end to end process, so that we need to see the individual detailed trades. Now if we see the practical example for cash reconciliation or position reconciliation, transaction reconciliation. Firstly, cash reconciliation, the operation team will review the fund cash account balance which is showing 5 million. So how much they are showing? 5 million they are showing. They need to compare cash balance reported by the custodian. If custodian was also shows 5 million, it is there is no discrepancies. If custodian is provided in the place of 5, they provided 4, but our books means operation team fund cash book is 5, there is discrepancy. Now we need to reconcile the reason for this discrepancy. What is the reason? If the cash is in transit or cash is not received or cash is kept in different places, we need to reconcile that. You need to provide the reconciliation discrepancy reason, that is cash reconciliation. Next, position reconciliation. Here position reconciliation means suppose the fund is executed 10 trades, so they are trading, they executed 10 trades. Now buying the 100 shares, next buying another 200 shares, next selling 300 shares, means buy 100 plus 200 300, and they also sell at 300 shares of particular stock. Now operation team will verify that net position will be matches holding reported by the broker. Means if we see in books, for example 100 plus 200 300 shares, and we also sell that 300, means net position will be 0, but the broker contact note they are showing only 200 shares net position, means they are not updated this 200. We need to see the reasons why they are not recorded, means at the end of the note the contact note is not received from the broker, or broker is not received the trade details. We need to ensure the reasons for position reconciliation. Next, transaction reconciliation. Here the fund record shows a purchase of 500 shares, for example 500 shares of XYZ corporation. Now the operation team, we need to check this against with the broker confirmation to ensure the transaction details, like what is the price, what is the quantity, what the perfectly match or not. You need to take care of entire transactions, that is transaction reconciliation. Next team will be the corporate action team. What they will do, the corporate action team, this corporate action team role will be they will manage and process corporate actions that affect the portfolio. Here portfolio like such has mergers, acquisition is happen of that fund, we need to account, and dividends was given by the company, we need to account this, we need to stock split, we need to take care, and right issue was happen this corporate actions. Next they monitor these events, whatever the events was happen this corporate actions, they need to ensure accurate record, and they need to adjust the fund holding and NAV accordingly. For example, practical example, if you see the corporate actions team, for example the dividend payment will be there. A company in the funds portfolio declares a dividend. Now the corporate action team record the dividend payment in the fund accounting system, update the cash position, and inform the pricing and valuation team to adjust the NAV whenever the dividend was declared. Whenever the right to dividend is established, we need to record the transactions in fund accounting systems, we need to update the cash position, and we also inform the pricing and valuation team to adjust their NAV, that is there. Next another example will be stock split was happen, a company was announced a 2 for 1 stock split, the corporate action team updates the record to reflect the each share is now split into 2, adjust the number of shares held and share prices. So for 2 for 1 stock split, now shares was be split into 2, and we need to see how much number of shares held and what is the share price. Entire capital was not changed here. Here they are taking the 2000 note and they are giving for 500 notes. Only the single transaction price was changed, but entire amount was not changed. Share capital will not change for stock split. Next another team will be the pricing and valuation team. This team role will be, this team responsible for accurately valuing the security within the fund, a critical step in calculating the fund's NAV. So they need to obtain the market price from publicly traded securities, and they need to negotiate and estimate the price for OTC count, some cases OTC market, or some cases stock trades. So stock exchange, if their shares was traded in stock exchange, they will take market price from stock market. If they are entered with the OTC, then they will go with the negotiation price, or what is the agreement price in the OTC, they will take that price and they will calculate. Appropriate method will be used. Now if we say market securities are valued using current market price, using current market price means these shares are listed in stock exchange, maybe BSE or NSE, they will easily available price because they have public was there for buying and selling. Next OTC securities, value based on negotiated price or service agreement. Here pricing hierarchy will be, we have pricing hierarchy in 3 types: type 1, type 2, type 3. Type 1 means we have the exact market price will be available for the our shares, means these are traded in the stock exchanges. Then this have more liquidity, this have more public to buy and sell, then we will have the exact price. That is type 1. Next, type 2 means you do not have the exact price for the product, but we have the similar market will be there for the price. For example, if we see how our building is there, we have commercial building and we do not know commercial building value of our building, but exactly opposite side same commercial building is there, they are went for sale, they have price, means we are going market price with similar market price available. Or next, type 3. So if we go with the type 3, same example if we take, we have commercial building but opposite side have one bungalow, and now if we see we do not have the same asset, similar asset we do not have for similar market price. Now we need to assume use some assumptions, we need to use some forecast, and such types we need to use for arriving the price. For that we need to use, mostly used method will be discount cash flow method. Next, practical example, if we see for the practical example for the market securities, if we check the closing price of ABC Corporation stocks on NISE, which is $50 per share, and update this in funds record. If we go with the OTC securities, that is over the counter securities, the fund holds a private equity investment. The team uses the recent transaction price. What is the recent transaction price? They are negotiated with other prices. Based on that valuation basis, they will use the calculation. If they do not have the recent price is not available, then they may use the discount cash flow method to estimate the value. That is type 3 valuation. For complex derivative where there is no direct market price, then the team will assume some assumptions about future cash flows, discount rate, market condition to estimate the value. Next, NAV calculation team. Here NAV calculation team is the main team which is there in the fund administration to calculate the NAV. For that NAV will use for calculating capital contributions or distributions, etc., etc. Here NAV will be calculated based on using the summing of all securities value of the portfolio. Then we need to add the accrued incomes, then we need to deduct all liabilities and expenses, then we need to divide the total number of fund shares. For that we will get the NAV per share. If we see the practical example of NAV calculations, suppose we have total market value of securities of the fund will be 200 million dollars will be there. The accrued income means dividend income or interest income was there $2 million. Next, liabilities are 10 millions. Liabilities means management fee, operational expenses, etc., etc., whatever the expenses. We need to add these two, means assets market value plus accrued income minus liabilities and expenses divided by number of shares 19 million, we will get the 10 rupees per share. Now decimal precision, so if we dividing, we will sometimes we will get the decimal. Here the decimal NAV team will ensure accuracy by calculating the NAV, for maybe they go with the 4 decimal places. Here decimal also plays the important roles. If we have the even small value changes that could impact the investor transactions. Now the last team will be the investor reporting or relation team. Here the investor relationship role will be, this team manages all transactions and the interactions with investors, including the processing subscriptions, redemptions, distributions. They will ensure the compliance with KYC and AML regulations, and they will provide the regular reports to investors. If we see the practical example of this investor relationship role, if we see there is their subscription processing. Now subscription processing, an investor subscribed 1000 shares of the fund. The investor relationship team need to verify the investor's eligibility and then they will process the subscription, then they will update the funds record. If you are any investor requested for redemption, then an investor requested for 100 500 shares, the team will need to calculate the redemption amount based on the latest NAV. So always they will use latest NAVs for the calculations. This NAV will be updated on a daily basis before 11:30 p 11:30 p.m. P.m. or 11:30 p.m. So at the end of the night 11:30 they will update the NAV, so that the fund accountants will calculating NAV on a daily basis. Now process of the transactions and update the investor record. Next, regulatory reporting. The team sends monthly statement to these investors, detailed their holdings, fund performance, and any distributions was there, and they will ensure the annual tax report, performance report, expense report are accurately and timely. These all will be there. Okay. Now we are the accountant, means we are ensure what are the teams will be there in the fund administrator. Okay, but what is our work? Means our main work we need to focus on general entries, so we need to pass the general entries. Now we will see in different teams they will perform different works, different activities. For different activities we need to ensure that day to day or end to end accounting. So we will see the accounting entries for different teams. First team we are discussing about operation team. Here what the operation team will do, they will reconcile the transactions with brokers and custodians. Okay, for reconciliation we have three types. We are explained about cash reconciliation, position reconciliation, transaction reconciliation. Now if we see, we have cash reconciliation. For cash reconciliation we have any difference, then we need to pass the entries. For that we need to see the cash reconciliation. In fund accounting book we are showing $5 lakh. Custodian report cash balance will showing $5 lakh. Then there is no problem, there is no discrepancy. For example, if they have some discrepancy, the bank charges was there, the bank charges was not recorded. Bank charges means bank fees. Bank fees means this is expenses. Expenses always will be debited. All expenses and losses will be debited, so that bank fee expenses account debit to cash account. So this entry was not there. Now whenever we are reconciling, that is cash reconciling is happen, we are identified. So now we need to pass the entry for bank expenses account debit to cash. This is cash reconciliation. Next, position reconciliation. Here the fund has recorded shares, 1000 shares. Broker report also 1000 shares. Then there is no problem. If you have the problem, then only entries will come into the picture. Now for example, if the broker report shows 200 shares, now fund house have only 100, broker report showing 200, means we are not updated 200 shares. Now we need to update that 200 shares position, means we are invested means this is asset. Whenever the asset is increasing, then we need to debit, that is investment in shares account debit to gain on investment, that is unrealized gain or mark to mark settlements. We need to account the transactions in day to day funds houses. So fund housing will be also regarding the unrealized profits, gains. Now that second one. Now third one, transaction reconciliation. If for example fund records shows purchase of 500 shares of ABC Corporation, then and there broker confirm the shows the purchase of 500 shares ABC Corporation. So here both have same, there is no problem. For example, if there is a error of they instead of 500 purchased 600 shares, but they are written as 500. Now for 100, we need to record the entry. For 100 shares, whatever the price will be there. For example, they are taking 100. 100 into 100, 10,000. So, investment means asset. Asset is increasing. Investment account debit to cash account. We need to pass the general entry. This is operation team's reconciliation entries. Next, corporate team. What we have discussed about the corporation team, corporate action team, they are activities like corporate actions they will ensure. Now, for this, we need to pass the general entries. For example, the corporate action was dividend payment action. Here, the dividend payment company portfolio declared dividend 2 rupees per share. The fund hold 1000 shares. 2 into 1000 means 2000. Now, whenever we got the right to receive, we need to pass the receivable entry. Here, receivable entry means asset, current asset. Dividend receivable account debit. Dividend means income to the fund house. Dividend income, this will go into the profit and loss account, and dividend will come into the current asset, and dividend income will go with the profit and loss account. Dividend receivable account debit to dividend income. Next, when dividend is received, actually we received dividend after declaring. Whenever we receive, we need to close that dividend receivable by crediting the dividend receivable and debiting the cash. Cash means whenever we are getting whatever receiving, debit what comes in. So cash is coming, we need to debit. Cash account debit to dividend receivable. Next, if we have see example 2, stock split was happened. The company announced 2 for 1 stock split. Now fund holds 1000 shares at 50 rupees per share before the split, but there is no entry for is required for the stock split itself, because it does not change the total value of the investment. However, but the records need to be updated to reflect the new number of shares and adjust the price for the shares. Now, update the records. You do not pass any reconciliation entries for a stock split, because their actual amount did not change. Total capital did not change. Whatever the total capital 2000 is there, 2000 only. Only the price was changed to 500 notes now. That now we need to update the records. Number of shares will be 10 into 2 and new price will be $25. Now next, కొంచెం